been hearing a lot about cryptocurrencies lately. Bitcoin's been in the headlines for making millions overnight and for being volatile enough to give investors a headache. So what role then do traditional assets like gold and other precious metals have to play in the economy of the future? Well, with me to discuss these issues are Josh Crum and Roy Seabag from Gold Money. I'm Julie McDonald. Welcome to the Business Debate. So with me to discuss these issues are Josh Crum and Roy Seabag from Gold Money. They are the founders. Roy, Josh, fantastic to have you here in the studio in London. It's great to see you. Let's talk about Gold Money and what it's able to offer the marketplace that others are not.
So think of Gold Money like an online bank account, except instead of being denominated in dollars or yen or British pounds, it's actually backed by physical, redeemable gold. Gold, silver, platinum, palladium that sits in vaults all around the world that we control, fully insured. And the account itself can be used just like a PayPal account. You can make payments, you can make transfers. We even give you a MasterCard that you can use to spend the gold or to withdraw currency from any ATM. But the benefits here are that you're using gold in a safe and secure way. You're accessing it in a very cheap way. It's only 0.5% to buy, 0.5% to sell. And if anything goes wrong with the financial system, you're safe.
What's interesting about you guys, though, is the tie between, in a sense, old money, gold, and this new technology. How did that come about?
Well, I think if you study the genealogy of Bitcoin, what you'll find is that the creator, whoever it is, it's a pseudonym named Satoshi Nakamoto, but if you read the text, this was an individual that clearly understood gold as an element, the history of gold and how it ascended as commodity money. But the most interesting thing that I think he brought to the table was he understood gold mining. He understood the amount of work that goes into mining gold. He understood that a commodity money has to have something known as a proof of work expended. And he really built, the original paper that many people trace to the original white paper for Bitcoin is actually a paper by a fellow named Nick Szabo that's entitled Bit Space Gold. And many people that are sort of the early adopters have always viewed Bitcoin as a digital version of gold. So I think that the idea of Bitcoin married with gold is an idea that has been part of the creation of Bitcoin from the start. It is interesting that we are the only service in the world that truly marries the two as a functional use case. You can have digital currency, you can have physical gold, and you're still able to use both currencies in the financial system.
So Bitcoin in particular has been in the headlines very intensively this past year or so. And it used to be, kind of pleasant dinner party conversation, but now the market's really paying attention. And your platform allows people to hold cryptocurrencies and to do it safely. How does that work?
Yeah, so we've been involved with the cryptocurrency space really for many years. We initially allowed people to actually convert cryptocurrencies into precious metals on our platform. We even have 2 published patents in that regard. More recently, after spending a lot of time investigating how we could provide a real safe solution to people, because when we looked at the landscape, we saw a lot of companies kind of rushing into this space, but not abiding by the basic best practices in financial services that we both had learned about as being fiduciaries. So something like financial audits, insurance, these are things that we expect from our banks. These are things that people expect from us at Gold Money. We spent a lot of time being thoughtful about how to build a solution for Bitcoin that would give people this turnkey service to just hold Bitcoin. It's already cold stored, it's insured, and it's also audited. And you can check our financial statements. We're a publicly traded company. And as far as I know, we're the only company really offering this service in the world today.
There was a lot of talk, wasn't there, after the financial crash in 2008, which I can't believe is a decade ago, about safe innovation. What is the path that the markets need to be beating in the future?
Yeah, I think it's a market of choice and really understanding, who holds the assets, where they're owned. And I think even we're starting to forget that already. You said, 10 years, and people are taking more risks again. We're seeing a lot of the repeats of what was happening in 06, 07. I mean, sure, it's great that the stock market's going up. People are feeling better about the economy and financial assets, but we haven't solved a lot of those underlying risks of counterparty risk. And so we need platforms that really focus on lowering risk for assets.
You've both been in the marketplace for a really long time. What are you paying attention to right now? What's exciting?
Well, I think the ongoing development in currency is really the most important thing that's happening in the markets. I mean, we're watching, technology stocks take off. Most assets were up last year from emerging markets. But the most important thing is what you're measuring those by. And when you're seeing this continued currency uncertainty matched with like the rise of Bitcoin, there's definitely something going on in currency markets. And I think that's still the most important thing for people to be focused on.
For you, what's exciting right now, Roy?
I echo what Josh is saying. I think that in the future, when people look back at the present, the most important event has been that people's concept of money is being changed. And the idea of a commodity money is returning back. People are realizing that you don't just have to use a government money. You can use other forms of money.
And as part of that as well, Josh, re-educating people in a different way, getting through a different message, because I think for so long we've lived in this
the
world.
old way. It's really reviving the ancient wisdom that has been prevalent as the primary form of cooperation between men. I mean, we are not geniuses here. We're just actually reading books that were published more than 50 years ago. And if you do that, and if you actually peek behind this curtain, you find that there's a very well articulated body of work, scholarly work. John Exter, who was head of the Federal Reserve in the United States, was a Harvard scholar that came up with a concept known as Exter's pyramid, where he basically drew a pyramid, an inverted pyramid, where at the bottom of that pyramid sat, the point of the pyramid was gold. And then on top of that, he had the base money and the cash and the treasury bills and the stocks. I mean, this was conventional wisdom. It's only today that you find that this information has literally been expunged from academia. And so I guess from our perspective, we look at the market, we see what gold's doing. It doesn't matter what currency you measure it on. It's the laws of physics that enforce gold's performance, not any economist. And we say, look, hopefully we'll be able to get people to change the way they think about this. But if they don't, at least we're providing sort of this tent for the people that do understand it.
Josh, a final word for you on the direction we should be heading in.
Sure. Yeah, what's interesting about what Roy was saying is the wisdom has been lost in sort of academia. There's this sort of dogma about money in central banking and mainstream economics. But despite all of that, what we call dogma, there's a market price, and the market price and the reasons why gold outperformed never changed. So the market is saying one thing, and everyone talking about the market is saying something different. So we'd rather listen to the market than what everyone is agreeing about, in some academic, bubble. And so, that's another big part of our business is that we're actually not, there's a lot of people that understand gold, but we're really looking at it like, we should be afraid of all of this centralization. We should buy gold because the financial system's going to crash again. And that's not the only reason, that's not the reason to buy gold. We invest in technology. We invest in technology companies. You shouldn't be comparing buying gold to buying Google. You should be comparing gold to other forms of money. And if you narrow and look at that band, the market shows that gold always wins. This is not, some theory. This is just what the market is telling you. And so that's what our technology is one part of it, but also what we're trying to sort of revive is this really basic wisdom of just, look at the market and ask why, and not focus so much on all these different theories. And if you look at money as a technology, it's actually always changing. Our monetary system is very different than it was 10 years ago, which is very different than 30 years ago. And so it's not like just because we measure in a US dollar or a British pound, we put it in the denominator, doesn't mean it's always the same. That was the trick. People think that number is always the same, but it's not. It's constantly changing. And if you compare it to gold,